and welcome to this chapter, multiple time frame. Combining time frames to see a pair as a whole. This is a skill that we will start to see develop over time. It is very rarely seen from a beginner, so if you don't see it immediately, don't be worried. It comes with experience and actually putting in the screen time. With this, let's go over to how we actually identify and how to use multiple time frame analysis on our charts. This is our trading view platform, so don't be scared. Every chart is exactly the same, regardless if it's MT4 or actually on trading view. It's exactly the same. But how do we actually use multiple time frame analysis? Multiple time frame analysis is used from what we call a top-down approach. Now, what exactly is top-down? Top-down means we do analysis on a monthly, to a weekly, to a daily, to a 4 hour, to a 1 hour. So we can get a clearer direction of the whole pair as a whole. We do not just want to get into a trade for the sake of getting into a trade. We have to understand what direction we're trading and why. So that we first have to do our analysis on the largest time frame that it's possible available to us, which is a monthly chart. On this monthly chart, we can either go look for certain levels that we enjoy to use, it's like a supply zone, or let's first plot out all our supply zones in fact. So let's go plot out a demand zone as well. Simply go plot out all your zones that you know that are supply and demand zones. Right, so now you've done that. Another supply zone here, what was a demand turned into supply. Now we can simply go ahead and use our chart as we can see it here. We've done our supply and demand zones. Let's do this last one here, it's like that. That's done now. Now, can we possibly identify any structures or patterns within our chart? Yes, we can. We can identify a head and shoulder pattern on the monthly, on USD, Euro USD. So, we go like this now. We measure our target on the head and shoulder pattern like we did in the previous video, from the high to the low of the neckline. We click control, hold the mouse button down, and we go all the way down to the bottom. This now gives a target to the next actual demand zone, which is down here. Perfect for trading. Okay, so now in the month that we actually understand what type of structure we have. We have a head and shoulders pattern, we have a possible neckline retest here, because we must remember a break of the neckline, which is this here, and the retest, we can now possibly get a drop to our intended targets further down. So we now know that on the monthly we have a combination of a head and shoulder pattern with a neckline retest. So in other words, we should be looking for sells in the monthly. So now we can mark down on our journal, we look for sells in the monthly on the Euro USD. You go down to the weekly on the Euro USD. You then can see that this area of support was broken and now retested as resistance, or was considered as we call demand, that was broken and retested as supply. And we can now see, we can maybe start looking for some sort of reaction in this area. Okay, great, because we have seen a reaction there. Let's now maybe go down to the daily to see closer. Now we plot out, we can see that this is an uptrend on the daily after its own personal little inverse head and shoulders. There's a left shoulder, there's a head, there's a right shoulder. Just like that. Okay, left shoulder, head, right shoulder. Made its waves up, and it's now forming some sort of head and shoulder pattern here as well. But firstly, let's plot our trend lines. There's from the lows, let's line it up. There we go. So now we have a possible trend line that's been broken and retested. Now let's make the screen a bit bigger so we can all see a bit better. This trend now is coming towards a possible end. Well, how can we say that? Because we've done our analysis on the monthly, which was actually telling us to look for sells. We had a month, we looked on the weekly, which actually said it's in that area of support turned into resistance, or of demand turned into supply. You should be looking for sells, because we only sell in a supply, we only buy in a demand. It is now in a supply zone, so we should be looking for sells. So what we could have now is a potential head and shoulder pattern here on the daily. There's a left shoulder, there's a head, there's your right shoulder. Now, how do we measure a target for our head and shoulder pattern again? From the neckline to the top, and you simply double that down. That would be our target. Now, on the daily, we should tell ourselves, okay, this pattern is forming, it's broken a trend line. Now what we must do, you simply go down to a smaller time frame, which is a 4 hour. Let's move that out the way a bit. There. Okay, so now we have a potential, as I said, a head and shoulder pattern. Now, what must we wait for on this here? We can start going down to the 4 hours, so placing trend lines. We can see it might line up with our right shoulder. Let's place another one here. Possibility of that there. And we can tell ourselves, right, we are not ready for this sell yet until price maybe reaches this level. So, what do we need to do now? We can simply go down a time frame again. Let's make this a bit wider. Now we're down on a 1 hour time frame. So we've gone from the monthly to the weekly to the daily to the 4 hour. Okay, what is our weekly telling us? Well, let's first say what the monthly was. Monthly was as I said, a head and shoulder pattern, neckline break and retest. So we should be looking for sells. Weekly was looking for a sell because it's at a supply zone. Daily, we had a trend line break and retest on the daily. Let's go back there quickly. We had a trend line break and a retest, as we said, with the head and shoulder pattern. Also reversal, also telling us it wants to sell. We go down to 4 hour. So now that's congruent of three sells, confirming they should be selling soon. Okay. Now let's go down to the 4 hour. Have you had some sort of structure here yet? Okay, this trend line could come up to this trend line or that trend line. You must remember trend lines is depending on how you see the market, so it could possibly be this trend line, the inner trend line, or the outer trend line. Could be either, but preferably I'd like to see a 4 hour double top making some sort of divergence here. We haven't had that yet, obviously. So now we're working into the future. Now we are almost predicting the outcome of our possible trade. So we have that potential double top area that in itself should form its own 4 hour divergence, and then ideally a candlestick information here should be an inverted hammer, a evening star, a bearish engulf, something like that. And then you go down to 1 hour. Now this is how you use multiple time frame analysis, guys, is that on a 4 hour double top, it will have its own 1 hour double top going like this as well to confirm the actual sell. If we don't get this, then it is not a sell trade. So in essence, this will have its own trend line forming from here, probably. Could be like that. Something like that. Now, this is what price possibly could do. I'm drawing hypothetically here. It could go high and then low and then high again. So we have 1, 2, 3, 4 waves and then the fall. Okay, like something similar to that. So we go down to back to the 4 hour now, and you can see maybe we'll get some sort of double top structure on the 4 hour. But that 4 hour double top has its own, on each little top on the 4 hour, has its own 1 hour double top. This is called multiple time frame analysis. You have to use all the time frames together to get an overall bias. And until I get a monthly that says sell, a weekly that says sell, a daily that says sell, a 4 hour that says sell, and an hourly that says sell, then I will execute a sell trade. And obviously the opposite for a buy trade. I'd ideally like to get all of those telling me the same thing, and then I go for a buy opportunity. In this case, I'd like to see a lot of sell confluence, which you're currently got on monthly, weekly, daily, possibly on the 4 hour, and then when you get on the 1 hour, then I'll take the trade. That is a definite. So hopefully you understand that, guys, that multiple time frame analysis, it is a skill in itself. You will eventually learn how to apply this. It is not difficult. It just requires practice. Practice is what helps you. You can just take any old chart, guys, any old chart, and start practicing these things. It doesn't have to be. What you can also do is you can mimic trade, not actually place trades, but theoretically say, okay, I'm thinking this is going to go short here because of such and such reasons, and you come back in a week later and you see, okay, I was proven right, that my trade would have been correct. So it's almost called mimic trading, fake trading, mimic trading. You mimic your trade, but you don't actually place a trade, not even on a demo, and you just follow the market. You first understand market structure, market pricing, market movement. Then you can actually start placing trades and applying risk. That is absolutely crucial. So what I need you guys to do in this chapter is, please take any chart. Don't take a chart that I've done now. Take any chart and practice multiple time frame analysis. Start on the monthly, do analysis there. Weekly, do analysis there. Daily analysis there. 4 hour analysis there. 1 hour analysis there. And when they all start lining up, then you know that your analysis is starting to come into play. It's coming into point. That means your skill is sharpening on how to read the market as much as your ability to place trades. Okay. So that, guys, please move on to the next chapter and keep trading a multiple time frame analysis. It's very, very crucial. Cheers.